Hey everyone, this is DayTraderRockStar, and it is time for the high probability watch list for the week of, which is next week, September 10th, I believe. 8, 9, 7, 8. September 9th, excuse me. We're still in summer officially, so let's not get too bummed out of the cool weather, especially if you're up here in the Northeast with me. It was pretty cool today. But overall, the day ended up pretty good. And this is a video going out. Of course, we're going to put this video out in two parts today. You're going to have both parts. If you're a member, you're getting both parts in one. If you're not a member, you're going to get this first part, but you won't get the really good section. But I just want to go over the overall market conditions right now and just talk about the market in general. We're looking at the S&P, or actually the spiders here, the SPY, which is the ETF to trade the S&P 500. And I like to look at this both on a short-term time frame, on a 5-minute chart. I love this. And I also like looking on the daily and anything else on a 60, because it gives me a good indication, even though we trade the futures, the ES mini futures. I use this also to balance out some of the other time frames. I just like the way it acts. It works good. And we're going to look at it right now. This is the daily chart, and you can actually see that the market has been in a kind of a rally here. We kept on talking about the last time we got oversold, and we had a little bounce, and we failed at it. But then we came down, and what I call a double bounce on the stochastics. Again, you don't see it that often. But instead of going embedded, you get a little bounce and then a bounce. And when you see that bounce, it's usually a good opportunity, that secondary bounce. That's where these divergence plays come in. Because when originally stochastics were developed by Lane back in the 60s, it was almost about the secondary bounces. If the price level continued to hold above the lows, if the stochastics came back to the lows. In this case, you could see we had a drop. We had a drop out and pulled back down. We bounced. This double bottom is really a key level here, and we had a big move off of that. And big move, it's not really a big move. I should hold back off of that comment. But we got a 3-4 day move up here, and again, this is just you qualify this small little rally just by seeing a series of higher highs and higher lows, and you feel it. You can see the energy has shifted a little more of the Syrian situation has been pushed off. A little more of the tapering has been pushed off. The market's kind of absorbing that and pricing it in, and we started kind of hanging out. It was a boring week overall. But I think we're surrounded with quality names, and we're going to look at these quality names today, and also looking at the market. You can see the daily here. We're not overbought yet. We go into next week, Monday, September 9th. Congress returns from their break. All right, so of course the Syrian issue comes back really on the front page here, and how we're going to deal with this. And we've seen it today. If we take a look at the S&P chart for today, right after 9:30, there was comments coming out. Both President Obama and President Putin were doing press conferences over at the G20. Putin came out saying that they were going to, if we attacked Syria, that they would defend it. And it was almost an open-ended comment where the market took it as, hey, we're going to fight back. We're going to, this is when I saw the first alert go across, and the way it was worded, it was like, it was like, oh my God, it almost sounds like they're willing to, if you launch a missile, we're going to launch a missile. And the market just sold off here pretty aggressively too, and it bounced a little and continued to sell off. And then there was some question and answers going through, and he went back and kind of talked about what we mean is we're going to maintain our policy of supporting Syria. We send, they send arms to them, so they're going to continue on that path. It wasn't anything, there was any warmongering there. So the market started reversing, and we started getting a grind up here, and we came back, and it was very bullish. And actually, I wanted to show you this chart because it's really a great example of what we look for during the day. What I look for in the futures. If I'm trying to read the market here, I have certain scenarios that play out that I can recognize by looking at my dual stochastics here. And dual stochastics are two time frames that I use all the time on day trading radio, and there's different scenarios that would play out, different signals that play out. And when I see those signals, I usually map them out on the chart as it's happening in real time. In some cases, if I have a really high probability setup on the futures, I'll even take those trades too. But in this case, we're watching, a market that has definitely been in the, just crazy today. Crazy. We had a 20-point move early in the day, and then another 10-point move up, and then another 10-point move down. I think overall, this market might have moved to 40 points, in range. This, at least, on the S&P. And that's impressive for this thing. But again, it's volatile, and you just don't know exactly which way this thing is actually going to finish up for the day. It's just very, very volatile. So again, you have to fight your fight. If you feel good in this market that you want to be in and just take the short-term moves, go ahead. But again, you could see something like this happen just by a comment coming out, a misread comment, and you can see the market drop 40 points. Oh, this is 20 points. Excuse me, 20 points here. 20-point drop. It went 1660, came right down to 1644, then rolled over to 1640. 20-point move. Then we moved back up to 1660. Another 20-point move. I mean, this was what a great day for catching some nice moves in the market. But even if you didn't catch that bottom here, which was kind of identified, I mean, you couldn't really, you look at this. I know the level Algo X was given I think a level 8. This was a news event. And it's very hard sometimes to catch that falling knife. And there is levels that come into play. And, we did have a kind of a dual stochastic setup, but we had one here, and it bounced a little. But it's hard, because it gets embedded. You never really have a good signal here. But now that we kind of rotated back up and got overbought, we started to see that stochastic started getting embedded to the upside. And that's usually a very strong signal. Usually we have the fastest stochastics, as we defined as the 1433, and a slow stochastic, which the time frame goes back 40 bars, is the 4043. And the faster one will rotate faster. So we have the comparable fast versus slow. And one of the setups I've seen in a trending market is called the flag setup. And the flag setup is when the fast stochastic rotates back into an oversold level, and the slow stochastic maintains that strength. And the strength could be anything usually above 70. It really is relative to what the market has been doing, and you really want to just kind of feel it out. But if you could start to see that rotation and that fast stochastic come back down to 20, but the slow stochastic's just really hanging around that 80, 70, 80 level, not really turning over, we look at that as a great. And then what the other important thing is recognizing what a flag is. The flag is a little pullback. It's usually a consolidation, a downwards, sideways consolidation, and we wanted to hold the two main moving averages that I follow is the 50 and the 20 period moving average. If it holds the 20 period moving average and you get that rotation, it's usually a better setup, which we were doing here. But the 50 sometimes comes into play too, and we actually could hold that. But again, it has to look like a flag. You just want this setup to happen. You want to see that sideways grind, kind of pull back, holding strength, holding above. The rally has proven itself that we are trading above the 20 and 50 period moving average. So we pull back to the 20, between the 20 and 50. And we get a trigger right there. And I marked that out as it was happening. And then from that point on, you can see the market pushed up here. It's not a big push, but it's relative to what the time frame represents. It's a 1 minute time frame. And these fast stochastics here rotate very fast. And these moves are meant to capture 1 to 2 points. In some cases, you'll get a half a point. But the majority of the time, you have a high probability setup when certain setups line up to get that bias to the upside. If you're in a strict downtrend and we get a setup and you're looking at a bounce play or your buy side, trader, you're going to get some upside, but you might not get enough upside that you're able to capture that profit. I mean, you might get 2 ticks or something, and it's just you're holding on trying to get more, and it actually comes back. So you try to take the best setups possible, and that's what I try to bring you, just the best setups. And patience is that that part of that secret sauce. If you don't have patience to wait for your setups, then you'd be chasing the market, or you'd be doing things outside the realm of high probability setups. And in my situation, then you're guessing. So then we're watching the stochastics here, and I'm going to zoom out here so you get a little better read of it. You can see that one flag pulled up, and we started pushing up here. And we started banging around here, but we weren't getting any dual stochastic setups, which I want to have both the fast and the slow above or below but there was one here, So this was really our first, and I didn't mark that one down, but you could see qualifies as a dual stochastic when we push back up above that 80 level at the same time. So that level right there represents exactly right there. You could see that. And from that point on, that would be a dual stochastic or a short-term sell signal. And then from that point on, you actually did see the market here sell off. And then what happens, we came back into an oversold level. So I did circle this one out, and then we started chopping around. Didn't look too good. And then it started moving up, and it actually was a good signal. And again, we started getting overbought again. And again, you can see we kind of get embedded here. Where's the true level? Because you start chopping around, and the market's looking very strong, and it's not a qualified flag. But then we see that rotation back here under 20, and we see this holding pretty good strength. And this is something I kind of just mapped out. I said it looks like a flag here. I'm not 100% sure. We have that fast rotation. This one's holding above 50, around 70 level, and so we marked it off. And then again, you could see that probably was the best setup here in that little pullback that led to a bigger move. And then from that point on, I was doing some research. I wasn't really paying attention to the market, but just going back here and just taking a look at it, we started flagging out, and we actually did come to a level here, and I did mark this one out. I looked up and I said, "Oh, we have a dual stochastic setup. Let's see what happens here." And you can see, right at that level, we started turning back up, and we did move up a little. I mean, it wasn't, again, this is one of the situations where we're starting to downtrend here, and it's one of the situations we might not get your full point. Maybe you saw that setup here, and you put your order in, but you get in 61.50 and the high is 62.50. You're not getting that. Maybe, if you're lucky, you're getting 61.75, and and it's just a lot of people are looking for some more things, and it's not going to happen. But either way, you come back down. And again, I was I wasn't even looking at the market at this point, but you could see the embedded stochastics down at the end of the day, and then we kind of fell off. But it is interesting, it was a very exciting day on a Friday, and actually we did good. I was happy. We scalped. I scalped Costco this morning, and Costco's been a great stock over time. And again, this is the S&P right now. And just to go back to the S&P fast. Which represents the S&P 500. We're going to have basically the same chart here. So let's take a look at that 60-minute chart, which is what I key in on. It's really, we did see some oversold levels in that bounce, and we're getting overbought now, and it's there's a little trend here changing. Actually, let me go to the SPY. That's going to give me less of those weird flags, weird shadows. There we go. There's the SPX. And you can see we pushed up against the top part of this channel line. It appears to be forming some type of bearish flag, but you can see what? We started breaking back above this trend line. Here, if we could actually put there's a couple obvious pivots here. There's a pivot here. You could probably even put an argument there was a pivot here. There's a gap here, which is very important. Because when we have a gap, sometimes we put a new trend in. We consider this a whole pattern in its own right. But this is also an interesting level right here. This is a little gap resistance area up here, and it's probably a good target overall. Sorry if I'm talking talking too much today. I'm fired up about the market. It was great to see some really good activity in the market, and I'm looking forward to next week. And if it takes Syria or it takes these issues to get the market rolling again, you know what? Maybe we'll just have to just settle in and just take it. There is great stocks out there. We're going to get to those next, right around the corner. And before I forget, this Monday we're going to return to FT71. It's coming back to do some guest spots at Day Trading Radio, Day Trading Radio. FT71, Futures Trader 71. You know him from Stage 5 brokerage. Great volume profile guy. That's where his claim to fame lies. And he's really good at that. And we're glad to have him back on. And that's going to be at 11 o'clock Eastern Time. All right? Eastern Time, 11 o'clock a.m. Monday morning. And it'll be an ongoing thing. He'll be making guest appearances throughout the whenever. So look forward to that. And then we also are bringing back the first announcement of this. I announced it today on the radio, but we are bringing back Ultimate Trader Showdown. And we're going to, FT71 and Stage 5 are going to co-sponsor that with us. We're going to give out cash prizes. And it is I'm excited about it. So it's the rebirth of that. We have that all set up. We're going to be opening up registration for that. We're going to have 16 players, the Sweet 16. It's going to be a bracket tournament. And then there'll be prizes given, cash, and we're going to announce that. That'll probably, you have to register, so I'm going to get you the registration forms out. I'll probably post those early next week. But it'll be fun. And also, FT is going to be coaching some of the traders, so it'll be a great opportunity to learn from him. And looking forward to that. So, back to the markets. I just want to get that out. That's Monday, 11 a.m. Back to the markets. Where do we leave off now? Well, we leave off exactly where we left off last week. We still have this overhanging news. And that overhanging news could push this market right back down here starting out next week. The way things are looking, technically speaking, this is, something that I wouldn't rule out. Move back down to lower trend line and possibly breaking this bearish flag. The stochastics on the 60 are a little extended. Remember, we looked at the weekly at one point, and we said, watch this weekly. The one thing I like about weekly is stochastics tend to trend very similar to trend lines. So when you do have two pivot areas, you watch that third pivot area. That's how a coil stochastic comes into play. You could usually put all these lines together. When you have an upward, here we have 1, 2, and we're going to come to this level, and you're going to look at this to push back up, and you're going to say, man, that's amazing. How did he know it was going to push right up there? Because, the underlying trend and how things are playing out here, it shows up with the stochastic. It reads that. And you can see it. You can almost see it starting to turn back up here. And it's maintaining that level. And this is usually a very bullish pattern because it takes a while to really get, up there. And during this time, you're constantly moving up. So it's usually a very bullish pattern, and it's usually a very bearish pattern when you see it coiled to the downside. So that's on the weekly. Weekly, don't count that weekly out. All right. Here's a 60-minute. Looks like we're going to get some downside early next week. But it all comes down to news. Let's talk about the taper for a second. Jobs report out. Not as good as expected. Does that, that's a plus for the non-tapering crowd. Because, everyone's talking about when's the Fed going to start to pull back on the stimulus. Well, they had their benchmark set at 6.5% unemployment. We're nowhere near that. We're 7.3, 7.4? 7.3, I think, today. But then they're starting to back talk and saying, well, September is probably going to be it, and but the jobs report was less than expected. So now we're talking taper light, the light tapering. Because when people talk about taper, they're thinking, everyone's always thinking, Jesus, they're gonna, it's gonna be cold turkey. It's not gonna be cold turkey. What's going to happen is the market has already priced in this whole thing, and when they hear that it's not a full taper, it's like, I couldn't even tell you what it's going to be. $10 billion. They're going to start tapering a little by little. And maybe even adjust it. Just like interest rates. Next month or down the road, they could increase it. That's what the norm is going to be. Let's do whatever it takes to keep this market moving up. If we need it to move up, we'll taper it up. Well, if it's hanging out by itself and looking pretty good, we'll try to taper back down. And that's how it's going to play out. It is. It's very obvious that that's how it's going to play out. So we're going to have this in our future. And the market will adjust to it, and it'll discount it, and it'll do everything else it needs to do, and then there'll be something else to play out there. But right now, taper light is on the table. And I can't expect anything other than... in the face of that news, that's a positive for the market. That's a positive for the market, meaning buy side area. But again, now the Syrian thing, could go anyway. And I was just thinking, I said, geez, what if they're there's so many ships over there, and there's Russian destroyers out there. There's American destroyers. All you need is just one little something going wrong, and then all of a sudden everyone's not talking to each other. I'm not calling for World War III. That's not going to happen. I think Putin and our president are intelligent enough not to escalate anything, even if there was some kind of weirdness that was going on. They would sit down and it would be some kind of weirdness out there, but it would definitely affect the market. Definitely affect the market. So we kind of have that hanging over our head still. The taper is kind of disappearing, I think. I think we're kind of safe on that. The next session, Congress comes back next week, and and then of course it's all about Syria and how we're going to go about that. And did you guys see today, at the end of the day, the reports that we actually market started selling off again about a little after 3 o'clock? This was a report of another gas attack in Syria. Now, this came across, of course, some of the Twitter feeds and stuff like that, and we heard about it on some news things, but it wasn't picked up generally by the overall stations. I was flipping around, and CNN, everyone's oblivious to what's going on. These news stations have no clue what is going on. The market's diving earlier today. Putin's declaring war, and the CNBC is talking, cars. They're talking cars, Tesla. So it doesn't, you would think that they would have better coverage. I'd be running out. I would be an apprentice there. I'd be running, sliding out into the camera. Breaking news, guys. All right. So now, where does it leave us? Let's talk about this week's watch list. All right. This week's watch list, and that's where you'll probably just get a little pause in this video as I stop it and restart it for the members. And let me just get set up for that.